Small caps are trailing behind the S&P 500 so far in 2024, but a rebound could be coming, at least according to our next guest, and there's a few names investors should be watching. For more, we've got Sandy Villere, who is the Villere & Co. partner and portfolio manager, joining us now. Sandy, great to see you. All right, so this is the rally that it feels like we've been talking about since the end of 2023 that could be coming for small caps, but we've seen them being outpaced. Why is that, and what could be the driver for when that rally does take place?
Yeah, I mean, you look at why small caps have underperformed, and it's amazing. I mean, they're only 4% owned in the broader market, and typically that's more like 8%. So I think they're under-owned here. And then you look at valuation. I mean, the S&P 500 is trading at a 20% premium to that 20-year price to earnings multiple, whereas the small caps are trading at a 20% discount. So I think, with the cracks in some employment numbers, and we'll see what we get tomorrow with payrolls, but I think that, a rate cut could be more probable than not, as you look forward to September, maybe a 67% chance, something like that. And I believe that if rates go down, small caps could really rally. So we want to be prepared for that.
Yeah, Sandy, is that going to be the catalyst? Is that ultimately what we need to see, a rate cut in order to see gains in these smaller cap names?
Yeah, and to my prior point, it's just they're under-owned, they're cheap. You look at the 3-year performance, the S&P's up 9.6% annualized ending May 31st, and the Russell 2000's down 1.6%. I mean, that's a 10%, lag annualized over 3 years. And they've underperformed by 5% annualized over a decade. And if you go back historically, more risk should equal more return. If you go back to the 1930s or something like that. So we think small cap sets up well as something that's very under-owned as you go into what could be, rates moving lower. And the bond market's smarter than the stock market, and the bond market's been moving down from a 460 to a 430 on the 10-year. So I think it's telling you that rate cuts could be coming, maybe the end of this year.
When we think back to some of the most overcrowded trades right now, I mean, how do small caps eventually kind of benefit if we do continue to see crowding into some of the most popular and namely into themes like generative AI and really the Mag 7 here?
Yeah, I mean, you look at Microsoft, Apple, Nvidia. That's 20% of the S&P 500. All those that are indexing into the SPY are putting 20 cents of every dollar into those 3 stocks. So it tends to be a self-fulfilling prophecy. But I'm just coming back from the Stifel Nicholas Investment Conference in Boston, and it's funny when I'm looking at the crowded trade, I tend to go into the rooms that are empty rather than the ones that are full. I want to find those names that are under-owned, maybe misrepresented from a valuation standpoint, and that tends to rue the day, at the end of the day.
So Sandy, talk to me about where specifically you're seeing that opportunity within small caps, because it's a pretty broad grouping. So, I mean, when investors out there are trying to identify where exactly they should be placing their money, what can you tell us just about some of the characteristics that you're looking for, or where more specifically you're seeing that investment opportunity?
Yeah, I like a handful of small names right now. I like a name, Ligand Pharmaceuticals. It's kind of a chicken way to play the biotech industry, but it's got plenty of growth to it, and I think it's underperformed, and I think it's got a good opportunity to outperform. I also like some of the smaller names that have a little bit of leverage. So think of Caesars, for example. It's underperformed for sure, and you just got Carl Icahn that bought a nice stake in the company. It looks to me like it's got a great chance of outperforming. Again, if you get rate cuts, a little bit of leverage, that could be like gasoline on the stock on the upside. So I look forward to seeing how that can play out.
What about in utilities? Are there small cap utility plays right now? I mean, that's the thing that we hear about next with regard to kind of the energy that's going to need to be required to power a lot of these data centers, given the demand that's ballooned for generative AI.
Yeah, that's definitely a way to play it. I mean, something like an Exelon or something like that, larger cap. But I think the data warehouses are definitely going to build out. I own some Freeport-McMoRan FCX that's putting all the electrification into not only the data center warehouses, but also electric vehicles and just infrastructure build. So I like the way that Freeport's setting up. There's a little bit of a larger cap, but one that I think works well. And kind of back to the prior question about where I'm looking in small cap land. I mean, regional banks have been almost a 4-letter word, and I think there's plenty of opportunity there. And in fact, the last thing that I added to the portfolio was a small regional in Montana, FIBK, First Interstate Bank. So a nice 7.25% dividend yield. And I think you just need the stock just needs to go from 26 to 28, and you get a nice return looking out, 12 months. And I think the risk is much lower than what you'd see in, certainly an overpriced tech stock.
All right, Sandy Villere, Villere & Co., a partner and portfolio manager. Thanks so much for joining us here this morning.
Thanks, Shauna. Thanks, Brad.